This is your tech news briefing for Thursday, October 20th. I'm Zoe Thomas for the Wall Street Journal. After back-to-back quarters of subscriber losses, Netflix appears to be turning things around. On Tuesday, it said it added 2.4 million subscribers, more than double what it had forecast. It comes as Netflix battles growing competition in streaming, a space it once easily dominated. It's been testing out new ways to increase visits to its site, boost revenue, and of course, get new members to sign up. Joining us to discuss all of that and where Netflix goes next is our Netflix and streaming reporter, Sarah Krouse. Hi, Sarah. Thanks for joining me.
Thanks for having me.
So, Sarah, Netflix subscriber growth for the third quarter was surprising to a lot of people. What do we know about how it pulled off that boost?
So Netflix added 2.4 million new subscribers in the September quarter, and they had said to Wall Street that they were likely to gain 1 million customers. Netflix shares were up about 14% as of Wednesday morning, which sort of reflects the jump that happened in after-hours trading after the earnings report. They were helped during the period by releases of popular shows like Cobra Kai. They had some high-profile movies released like The Gray Man, which is one of their films where they're trying to sort of really do some franchise building, which Netflix hasn't really had in the past, as well as some surprise wins like Purple Hearts, which is not, like the flashiest of movies, but did do very well among its viewers. And then finally, towards the end of the quarter, the Jeffrey Dahmer story has done incredibly well and shot up to the top of its most watched TV charts. So the combination of that really strong content sort of lifted them during the period.
So Netflix saw this subscriber growth. Where did it come from?
The vast majority of the subscriber growth for Netflix during the third quarter was from Asia. They did add customers in each region, but Asia was really the sort of outstanding region in terms of net new subscribers. Another interesting sort of change during the quarter was that for the first time in Netflix's history, the number of subscribers in Europe, the Middle East, and Africa surpassed the customer base in the US and Canada. Now, the US and Canada is still the largest market by revenue, but it's interesting to see as Netflix makes that international push where that growth is coming from.
And is that growth also translating to the kind of content that they have on the platform?
It is. I mean, one of the things that you've seen, Squid Game was sort of an early example of it, of content that started in Korea and then really spread like wildfire and took off around the world. In the third quarter, one of the sort of strengths that the company called out was Extraordinary Attorney Woo, which is another Korean title, but that did well globally. There was another film from Denmark that also did really well. And so Netflix definitely played up the idea that hey, we're making hits in other parts of the world that are appealing to viewers in all different sorts of markets, that having a hit in one country or region doesn't mean that that content's going to stay there.
So there's been this focus on content, but they've also been looking at other strategies to get subscribers and to keep subscribers. One of them is this ad-supported tier. We've mentioned it a few times on the show. Where do things stand with that?
So Netflix is in the midst of two really important strategic shifts that are pretty fundamental to its fortunes going forward. The first is the ad tier, as you say, and Netflix, the week prior to its earnings report, made more sort of concrete announcements around its ad tier. So it said that the plan will roll out in early November and that it will cost $6.99 a month. So having that clarity around the pricing and the expected launch date, I think gave investors a lot of confidence. And the other thing to note about both the price point and the timing is that it's $1 less per month than what Disney will charge for its ad tier starting in December, and the launch is a month before Disney.
So maybe trying to undercut some of the competition. What's the other way that they're looking to boost revenue?
The other important strategic shift is cracking down on password sharing. So one of the things that helped Netflix as it grew was that members sort of widely shared their accounts, and Netflix kind of celebrated it for a while too, because it was visibility for the platform. People talked about what they were watching with friends and family. They shared their password. But now we're in a whole different sort of streaming landscape where competition is such that Netflix needs to make sure that it's maximizing the money it makes from each customer. And so they've said that early next year, they're going to ask households that share accounts outside of the bounds of what their plans allow to pay a little bit more to do so.
What is Netflix doing to keep track of subscriber movement, whether they're dropping off the platform or, staying, but maybe not using it as much. How are they keeping track of users' activity?
So Netflix has a number of internal metrics that help it keep an eye on the quality of content and the success of the content investments that they're making, as well as the product improvements and viewers' overall engagement with the platform. So a really important metric for Netflix lately in particular is not only how sticky content is, so what percent of people who start watching a title make it through 75 minutes or more in the first month, basically, but also the number of times per month that members are coming back to the platform. And that's something that really matters as Netflix is trying to keep members engaged at a time when streaming consumers generally have become more fickle and are more willing to turn off services when they're not actively using it. At the same time, Netflix is trying to understand how people are streaming now that they're going back to the office and traveling more and doing more activities outside of the home.
You know, Sarah, it feels like even though we're talking about revenue, even though we're talking about subscribers, we keep coming back to content. And, analysts we've heard over and over again say content is king. And even with growing competition in the streaming space, if you have good content, your platform will be fine. But we are seeing so much more competition in this space. So does that still hold true?
Content is the differentiator still. And as you say, it's a hard thing to win on because it takes a lot of really smart bets and smart dollars spent. And it's the thing that these platforms, now there's about a dozen mainstream streaming platforms in the US, they're all competing on the same thing. So, Netflix said that it feels like its pipeline is really strong and that they've gotten better at sort of smoothing out releases such that they have a steady march or steady drumbeat of hits that are likely to create buzz and that in turn drives fresh sort of subscribers to Netflix or that keeps its current subscriber base really excited.
All right, that's our Netflix and streaming reporter, Sarah Krouse. Thanks so much for explaining this for us, Sarah.
Thank you.
And that's it for today's Tech News Briefing. If you want more tech stories, check out our website, WSJ.com. I'm Zoe Thomas for The Wall Street Journal. Thanks for listening.